Someone's entire life savings are about to vanish, and they have no idea. This isn't a warning they'll receive. No alarm will sound. One day, they'll open their phone, check their portfolio, and realize that what they thought was the safest investment has already taken everything they spent a lifetime saving. This isn't fiction. This happened to real people on January 11th, 1973. The Dow Jones hit 1,067 that day, an all-time high. That same week, Barron's magazine wrote, "Not a bear among them." Across Wall Street, not a single person was afraid. 694 days later, less than 2 years, some of the most trusted companies had lost 91% of their value. Great companies, terrible prices. This mistake happens every time, and that exact same mistake is happening right now. Maybe even in your portfolio. The ones who couldn't fail. They were called the Nifty 50. 50 companies: Coca-Cola, Disney, McDonald's, Polaroid, Xerox. This wasn't some small gamble. These were America's most trusted, most dominant corporations. Wall Street gave them a name: one-decision stocks, meaning you only had to make one decision in your life: buy them and never sell. Price didn't matter, because these companies could never fail. People were willing to pay 80 or 90 times earnings for them, while the rest of the market traded at just 18 times. Think about it. If someone told you that you owned the safest investment in the world, and that within 2 years you'd lose 90% of your money, would you believe them? No one did. The day everything shattered. Then 1973 arrived. Oil crisis, inflation, recession, and that confidence coursing through the market suddenly vanished. 694 days. In just 694 days, the overall market crashed roughly 45%. But the Nifty 50, the ones called unable to fail, they fell even further. Polaroid, down 91%. Avon, down 86%. Disney, down 87%. Xerox, down 71%. A Forbes columnist wrote, "The Nifty 50 were shot one by one." You see this quote everywhere, but stop for a second and think about what it means. These aren't just numbers. These were people who put their entire retirement savings into safe stocks, and they watched their money melt before their eyes. The most confusing part? Many brokers themselves didn't understand what was happening. Prices kept falling every week, and they kept telling their clients, "Just hold. This is only temporary." That temporary dip lasted 2 years. Same story, new characters. Now stop here and understand one thing. That day on the NYSE floor, no one knew they were standing in the middle of a historic mistake. They thought they were just smart investing. Today, that same feeling exists, only the names have changed. Instead of the Nifty 50, we call them the Magnificent Seven. Apple, Microsoft, Nvidia, Google, Amazon, Meta, and Tesla. In 1972, the Nifty 50 made up 45% of the S&P 500. Today, these 7 companies make up 36%. A long decade, different technology, same structure, same confidence, same belief that these companies cannot fail. The money moving behind it. Every great story has a hidden character. In this story, it's not AI, it's money. Just 4 companies, Amazon, Microsoft, Meta, and Google, are spending a combined $650 billion on AI infrastructure this year. That's more than the entire annual economy of most countries in the world. In 1972, the same thing happened. Pension funds, mutual funds, and everyone pouring money into safe blue chips without asking what price they were paying. Today, the same thing is happening, only the shape has changed. The champion wounded before the fight. This money goes into chips, data centers, and power grids. And here's where the first crack appears, exactly like that 1973 pattern. Nvidia, the biggest company building all this infrastructure, has become the worst performing stock in its entire sector this year, like a heavyweight champion who gets injured before his biggest fight. Their next chip, Rubin Ultra, is delayed by 2 years, giving rivals the opening they've been waiting decades for. Even the strongest player can lose their spot with one mistake. That's exactly what happened in 1973. And here's what's confusing everyone. In that same quarter, Nvidia's revenue was record-breaking, beating every Wall Street estimate. In any normal world, the stock should have risen, but it didn't. Analysts were confused among themselves. Some raised price targets, some downgraded, all in the same week. When a company's best quarter can't move the stock, that's the biggest red flag that something else is happening beyond the numbers. When everyone was scared on the inside, here's the part that tells you what's really going on. Remember that analyst who wrote, "The economy is less vulnerable now. Confidence was highest when it should have been lowest." The same thing is happening today. Google's Gemini co-lead, Noam Shazir, suddenly left for OpenAI. One day later, Nobel Prize-winning researcher John Jumper left Google too for Anthropic. 2 days, two of the world's most important AI minds. They both walked out the same door. Alphabet stock dropped within days because people don't bet on balance sheets, they bet on people. And when a company's smartest minds start running, the people sitting outside get scared too. At the same time, Meta's CEO himself admitted to his team an uncomfortable truth, that AI isn't moving as fast as the world is being shown. He said this after the company had already laid off thousands. These companies, which we consider unbeatable, are scared on the inside, just like in 1972, when everyone looked confident until everything started falling. And this confusion isn't staying on Wall Street. Retail investors are asking themselves the same question. If the smartest people are leaving these companies, should I keep my money here or not? No one had a clear answer. Not the experts, not the small investors. And this confusion, in 1973 too, was the first signal before the crash. Back to that morning. Let's go back to January 11th, 1973. That morning, on the NYSE floor, no one knew the next 694 days would change their lives. No one knew which stocks would fall 90% and which, like Coca-Cola and McDonald's, would become the world's most successful companies 2 decades later. Because here's the real twist. The companies weren't fake. They were genuinely great businesses. The problem wasn't that people invested in wrong companies. The problem was they forgot that everything has a price, no matter how good it is. History doesn't punish people for believing in great companies. History punishes them when they forget that a great company isn't always a great investment. Price matters too. On January 11th, 1973, no one knew this. Today, you do. Great companies, terrible prices. This mistake happens every time. The question is, what will you do with this information?